Thank you so much. Good afternoon, everyone. What an honor to be here. I thank Amartha and the rest of the organizing team for the great work. And we are keeping the best for the last session today. So I'm hoping that we'll get a chance to clear that previous crowd and bring the new crowd in here. So I would, while we're waiting for the rest to settle down, thank you very much for staying on to this event. I just want to kind of give some statistics about the SME community here in Indonesia. Now, do you know that there's about 97.2% of the Indonesian workforce that is employed by the small and medium enterprises? And Indonesia is home to over 60 million MSMEs, and they contribute about 61% of the GDP. And Indonesia is blessed with the creative and entrepreneurial spirit in this country. And we have been very fortunate to call Indonesia our home in the last 2 years. Yet, many of them in the SMEs and MSMEs are stuck in the growth of the business for the next stage of their path towards digitalization. Mobile penetration is over 124%, but the use of mobile technology is mostly in the creative realms, social media, entertainment, like 126 million TikTok users, 117 million Facebook users. These are astounding numbers. But how can we convert that to productive use into the growth of MSME and SMEs? So sustainable development of the SME is critical drivers for the economic developments. And the other aspect is the challenge around limited working capital. So innovative solutions towards embedded finance is pivotal for that growth as well. So when we start looking at it, it's also a skills gap among the SMEs and MSME to help them push to the next round. In this panel, we are very fortunate to have esteemed speakers in their specialty to talk about the challenges and opportunities to help grow the SME population and also their potential into the next round. So without further ado, I'd like to go around with a quick introduction for each of you. Maybe we start with Miguel.
Thank you, Leslie. My name is Miguel Soriano. I work at IFC, which is the private arm of the World Bank Group, based here in Indonesia. My work is really supporting the financial sector and providing better access to finance to MSMEs, women entrepreneurs, as well as on the climate, finance, and sustainability part. I can explain a little bit more about my background, but I will keep it short. I've been doing a lot of work on digital finance and fintech for quite a number of years, and it's a passionate area of mine, which we can discuss a little bit more on how digital can really help drive better access to finance to MSMEs. But let me turn it over to my other colleagues. Thanks.
Hi, hello everyone. Thank you for being here, and thank you, Amartha, for inviting. So my name is Joshua. You can call me Josh. I've been a venture capital investor for the past 11 years in Indonesia. So I started my career in corporate VC called MDI. Basically was one of the sort of early employees there. And then, 2019 moved to Berdiri Capital, also a state-owned enterprise, sort of corporate ventures. And I think that's where myself and the Amartha founders have the chance to work together. And after 8 years in state-owned enterprise VC, I joined Vertex in 2022. And as a background, Vertex is an early stage sort of investors focusing on early stage opportunities in Southeast Asia and India. We're currently deploying from our fifth fund, which is around 541 million to be exact. We are sector agnostic investors and trying to, my focus is here to find the opportunities for Indonesian market. So,
brilliant, thank you. We have a startup here, welcome, Gaurav.
Thanks. So I'm Gaurav and I'm co-founder at Samai. I have close to 9 years experience in technology and product. Last 7 years I spent working, solving different problems through my own ventures. This is my fourth venture, Samai. I've worked for US markets, worked for Indian market, and this is the fourth one, which I'm trying to solve the problem in Indonesia on agriculture sector. Yeah, thank you.
Over to you, Hani.
Thank you, Leslie. Thank you for everyone to be in this panel, and thank you, Amartha, for inviting me to join. So I'm Hani Ibrahim. I'm Chief Investment Officer at Lendable. We're a credit provider to fintechs across emerging and frontier markets. So we essentially provide debt facilities, including to Amartha, to essentially do more of the impactful investment work that these businesses do, and essentially at the forefront of the digitization and financial inclusion space to bring capital to those in need of capital who are excluded, underserved in many of these countries.
Thank you. Now that you know who our esteemed speakers are, so we'll go through some questions that we discussed in the VIP lounge. Perhaps we'll start with Miguel. How do you leverage digital technology and fintech to improve access to finance in the underserved communities, especially with IFC double bottom line, across ASEAN?
No, that's a great question, Leslie. I think it's a nice softball question to get us started. For me, it's an area that I've been passionate about. As I mentioned, I did my PhD on fintech and financial inclusion in Singapore after spending many years as an investment banker. I think it was a great way to redeem myself. But really, through a lot of work that has been done over the last 15 years or 20 years, it's very clear that digital technologies like cloud computing, mobile phones, data analytics, AI, blockchain, they're all enabling us to be able to access financial services from anywhere, at any time, at an extremely lower cost. So this is something that has been shown through many different ways in many different parts of the world. Even in Indonesia, we're seeing that, where you have startups who, like Amartha, have done very well in bringing people to market that you never thought you could bring to market, had no access to any credit bureaus or files in terms of identifying themselves. And yes, there is a lot of progress being made, but as you mentioned, Leslie, there's still quite a bit more to be done, right? We have a lot of great digital channels that have allowed us to lower the cost, like the mobile phone, but we're still not using it to its full potential. But maybe to give you an example of the power of digital in terms of how this works, and maybe quoting another country outside of ASEAN, for instance, IFC invested in a startup called Grassroots in Philippines, which is essentially providing e-commerce services to sari-sari store owners. And sari-sari store owners spend almost a whole day just shopping for the goods for their store. And they have to buy it at retail. So what Grassroots has done is they have partnered with very large FMCG providers, get them the goods at wholesale price so they can save, they can order it online, and the delivery is free. So no longer do they have to lose a whole day of business to do this. They can do it at a much cheaper way. And by having the availability of the data and the goods being sold through their platform, they can build a digital track record so that they can then provide financing to these store owners as well. So it provides a channel that is very, very clear in terms of how you make it happen. But of course, there are challenges, and we'll talk more in detail about that. But let me turn it over to you back.
But also, there's some elements of comic force, right? Didn't you know Andy Telfon about 10 years ago?
That is true, yeah. Andy was one of those folks who participated in my PhD research. So he was very kind to give me data, and I see a few folks here in the audience who also were very helpful to my research, But yeah, I think Amartha was a very helpful player to see what can these fintech startups do to succeed in terms of driving financial inclusion using technology.
That's wonderful. Well, since we have a startup here, I'd like to turn it over to Gaurav and look into how you are addressing some of the challenges in digital divide.
Sure. So, like you mentioned that there's high adoption in terms of social media in Indonesia, and the smartphone penetration is also high. The biggest challenge that we see is right now, people are using it for consumptive things, consuming a lot of information, but there's a lot of gap in terms of having confidence and ease of use of technology for productive use cases. So at SMI, we are trying to address this by, having a feet on street approach, where we're trying to handhold these people in using technology, getting some initial comfort levels, and then eventually look at, where they can use the technology by themselves. So it's a very step-by-step approach which has to be used here to bring in this change of digital adoption.
Excellent. Now, turning over to you, Hani, you are working closely with Amartha, so maybe you can give your perspective from your viewpoint on how you see SME digitalization and where are the gaps for investors' point of view.
Sure, and it's really picking up on some of the points that Miguel mentioned and Gaurav mentioned, that we're seeing a push to digitization, but it's not complete digitization. So you can't get a perfect digital footprint for SMEs. It's just we're trying to create this from scratch effectively. What that means in terms of challenges is that you have imperfect information, and there's a danger that you actually feel that, wow, we've got this digital record set of data information that is digital, we should rely on that to then provide further products, whether it's lending, whether it's savings, insurance, payments, etc. But it's imperfect. And the challenge is converting those. I think you mentioned 117 million TikTok users, is essentially forcing them to not use TikTok and forcing them to use something else. That it actually has happened elsewhere in other places where people have been forced to use digitized products, and it comes with pain and challenges, but it's worked. So UPI, PIX in Brazil, and we can talk about that, further into the session. But you've kind of got to get a full digital picture to then rely on that data, because the data we use to underwrite transactions like our lending to Amartha or other such businesses, we know it's not perfect. If we knew it was perfect, we could actually do more, and we could probably provide better terms and better, other kind of features to that capital, which can then be passed on further down to the underlying customers.
Right. And we also have a VC here from Vertex point of view. What are some of the most promising investments that you've come across in the ASEAN region?
I would say that for the last 10 years, if we categorize the last 10 years as the emergence of Web 2, I think, the theme of digitization have been very prominent, especially in Indonesia. Like digitization on consumer and SMEs, providing them access essentially for consumer access to products, access to services. From SME perspective is access towards opportunities, right? Where they can basically improve their livelihood, improve their economy, what have you, increase their spending, what have you. We are very fortunate to be one of the early investors in Grab, for example, that do exactly just that, basically connecting the SMEs and the consumer. So the digitization of that sort of platforms is very, very prominent, at least in the last 10 years. Digitization of financial services is another thing. We've seen companies like Amartha thriving, basically the fintech companies. I mean, right now it has its host, but some companies are getting over the hump, like Amartha, right? So it's a proven that there's the market for that. I think the biggest challenge for this particular sort of theme is that I believe when you say about the adoption of TikTok, social media in Indonesia, which is very, very prevalent, we cannot speak in the same sense on these productive sort of tools. I think when you're talking about digitization, the cost for digitizing, especially the SMEs, is very, very expensive. So on the, in the investor lingo, the CAC, the cost of acquisition, the cost of education, cost of activation, cost of retention, what have you, is very, very high. I think you can speak a lot about it, right? So then the challenge will be how to monetize and how to create a viable business model around this, right? When you have a higher CAC, you need the higher LTV, lifetime value from your customer as well, right? So how to do that? I think only a few business models that can actually do that. Micro lending, Amartha is one of them, I believe, right? What the others? So basically that's I think the missing puzzle piece that I believe that every investor like ourselves is trying to find for the next sort of, I don't know, billion-dollar idea, something like that in the future, so.
Great. So in your opinion, how can we unlock that potential, right? Because you see some of the challenges out there, especially, Hani, you were talking about the pace of digitalization, right? How do we accelerate going forward?
Yeah, it's a really good question, and I guess there's a case for both ways, whether to do it in a steady approach or to actually really accelerate and turbocharge it. We've seen some examples of turbocharging. So India has done it with UPI. They've forced it on people. And I think some people were kicking and screaming into it. But now that system, I think it processes more than 2,000 transactions each second. I think there's 300, 400 million monthly active users, which is far beyond Indonesia's TikTok count, right? Brazil's done it with Pix, and Pix is now taken over cash as a means of transacting. It's taken over cards. I think the central bank governor actually said heading towards a situation where credit cards and debit cards may no longer exist if Pix continues the way it does. So it can happen. I think that the way it can happen is actually centrally, and the government has to do it, has to push it. Whether, and this is not a question for, I guess for us, it's really a question for each government in each country, whether the conditions are right, both socially but also politically, to do it and just force it through, and whether that country can sustain it. But I think that's what it will take, because off the back of that, you can build so much, right? All of the existing fintechs have plugged into these new turbocharged measures and built other products around it. There's also more regulation around it. It's brought down costs significantly for everyone. It's provided a lot more access. So I think that's one route.
Great. I'll turn it over to Miguel. So now that you've lived in Indonesia for the last few years, what are some of the significant barriers in terms of the digital adoption here?
Yeah, look, I think Gaurav hit on a couple of points that were very clear on that, and also Hani too. One big one, which is the elephant in the room, is digital and financial literacy, and getting the education to the folks at the base of the pyramid and even in the rural areas on how to use these products. It's not only about education, but also coming up with the right products that meet their particular use cases, right? So I think that's also a tricky part, because sometimes you find, startups who have the greatest technology and trying to figure out how to fit that in there when it's not really still solving the issue that the customer really has. So it's being very customer-centric in developing your products. And I truly am a big believer of high tech with high touch. I don't think if you're trying to address the people at the lowest levels, that you can do it without having that high touch piece of it. So that, to me, I think is a big aspect of it. And then, Henny, you hit on the right point. There has been, a lot of initiatives from a government perspective to drive forward, adoption. In some markets it has worked very well, where you see a tremendous commitment from the governments. But if there is no commitment or very little commitment, then you live in this gray area on where are you and how do you fit and how do you grow, right? So having that encouragement from the government and even incentives to get the digital sector and the digital financial services companies to thrive becomes very critical. And then all of that comes all around into trust, right? And building trust, because a lot of people don't trust using these new companies, right? They see them as brand new, that they have never worked with before. They're not the same as banks, but at the same time, a bank is better well known to them than a fintech startup sometimes, right? So how do you build that trust? And a lot of it then has to be with transparency, with what kind of services they provide. If there are complaints, how do you address them in a very quick manner to satisfy their needs and to be able to address their issues? So to me, those are the three critical areas: trust, literacy, and also how do you get the government to support and driving it?
Very good point, to drive at scale, because we talk about the role of government, right? I mean, I work on the side to support government on digitalization and how government can support MSME and SME. I'm currently still on the board for Singapore GovTech, and Singapore is a great example of how there's a lot of incentive put together for digitalization of SMEs and creating this SME Go Digital programs during COVID and post-COVID, even accelerating that effort. So with the startup in the room here, you talk about digital literacy as well, right, and capacity building. Perhaps you can comment on that.
Sure. So I think, again, reflecting back on Hani's point as well. So there are two roads from here, right? Like the private sector has to support and the public sector has to support. Right? When we look from the private sector point of view, I think what is more required is innovation on the tech solutions, having more customer-centric solutions, not specific or generic solutions, or focus on specific markets. That's more important. And obviously, from the private investment point of view, something which is monetizable. So finding the right opportunities and focusing on the right needs of the end consumers, that's more important. When it comes to the public market, I think we see decent, support from the government here. I can, tell you a couple of things about what is happening at SEMI, also in terms of support there. But I think like just more enablement of tech innovation through government is going to be a good driver for the change in the Indonesian landscape. When it comes to SEMI, I think we had, Prisma agreement between the Australian and Indonesian government, and Prisma had supported us quite a lot over last 8 to 10 months over bringing in this digital literacy, not just focus on digital aspect of like the productivity aspect of digitization, but also on the financial aspect. So I think there are some initiatives which are happening already in the market. It's just that both the things have to come and play together.
Great. Now, coming to you, Josh, you mentioned about a vibrant ecosystem from a VC point of view and how do you create that ecosystem. How do you see that happening in ASEAN market?
I would say that in the last 10 years, it has been super vibrant already, at least from the VC fundraising perspective. So dry powder-wise, I think, I have some figures here, but dry powder-wise is actually, in 2023, these VCs across Southeast Asia, they managed to basically raise total amount of money of $6.9 billion US, which are great, right? It's not the all-time high, but basically it's among one of the highest in the last 3 years, considering the economy, right? However, the other side of the coin is that right now is 10 years already, pretty much, on the Indonesia startup scene. I think if you are an LP of funds, you would like to see more returns, more liquidity, right? Where's my money? Where's my DPI?
Exit strategy.
That's right. And unfortunately, I must say on this regard, we haven't done particularly well. I think the amount of exits, for the 6.9 billion that raised in 2023, do you know how much exit that we made during the same year? 1 billion. That's it. So yeah, that's the figure. I think I got the number from PitchBook. So the large magnitude exits happened in 2021 from the 3 exits. Basically, our 3 decacorns happened in 2021. Basically, Grab SPAC, Goto's IPO, and also Bukalapak's IPO. I think that drives around 70% or almost 80% of total exits that ever happened in Southeast Asia since 2015. So it's still very, very concentrated, right? So meaning that if you're not one of the investors of these 3 companies, most probably your fund are not making any money, right? Which is pretty, I would say pretty bad. And, thinking considerably that, some of these companies that have gone public are not doing particularly well either. I think the latest number that I saw, Bukalapak is not even $1 billion company anymore. I think it's already below 16 trillion rupiah, below 1 billion. Yeah, so I think what we need to do, at the very least from the ecosystem perspective, is, again, this sort of quote-unquote poster boys of our, of our sort of tech ecosystem today is basically built upon, some, I must say, quite inflated valuation, quite inflated price, to put it that way. that is occurred during the 2020-2021 run. Maybe the run ended in 2022. Right now is the right sizing time. So I think, valuation is getting normalized. Price is getting right size. So the entry valuation is much, much more important today for any venture capital, especially early stage investors. Number two is on having I would say a healthier or a better poster boy of our ecosystem, being that, our public market loves company who has created a big, thick profitability in their books, right? So I'm hoping that before the IPO, some of these companies can, becoming cash flow positive, can become EBITDA positive, and then list themselves in the market, becoming like the new catalyst for our, capital market investors, right? And number three is the more sort of vibrant. By doing that, we hope that we can foster a more vibrant sort of exit ecosystem, meaning that a bigger, larger companies can see Indonesia as, as a real sort of market with good, high quality exits. Hence, sort of acquisitions, more M&A can happen, because again, there's more M&A than IPO happened in the last 10 years, but it's from the magnitude standpoint, I think I can only think about 3 companies that, pretty much exited or being acquired at $100 million valuation in the last 10 years in Indonesia, right? So, from the value creation standpoint, it's not creating that much value at all, I would say. So, I think those 3 things need to be done. If you're talking about like making the ecosystem more vibrant for the next 5 to 10 years in Indonesia and Southeast Asia.
Wow, Josh, thank you for giving such explicit view on the investor side. But perhaps coming to Miguel from a development institution, let's bring some silver lining to this whole thing. From IFC point of view, and how do you think about leveraging digital technology in this region to really drive financial inclusion, and where are the opportunities?
So IFC operates through 2 main functions. One is technical advisory, which is where I'm part of, and it's really providing technical advice to existing clients as well as developing new business opportunities that drive bankable investments. And then 2, which is our bread and butter, is investments. So we at IFC and the work that I do in the financial sector support the entire financial sector, including financial institutions, MBFIs, multi-finance companies, startups. And ultimately what we want to do is provide capital, driving impact. So for us, access to finance to MSMEs, access to finance to women, access to finance specifically related to climate and sustainability are very big priorities for us in Indonesia today. And when you look at the investments that we have made, of course, we have participated in the debt transaction for Amartha, which we thought it was a very interesting type of structure that we did here. We've also invested in a one-to-nine on the equity side. We've invested on Kitabisa as well. As you can see, all of them have a type of a theme which is very much driving impact when you're looking at using technology to do that. At the same time, we're also embarking in other areas which are much more frontier, which have been around, but we're exploring in more detail, which is embedded finance, where you're trying to embed financial products and services in more real sector platforms, whether it's agri-tech like Samai, or whether it's in an e-commerce platform. We're doing a lot of work with Evermoss, which we are also an investor. It's a social commerce platform that serves tier 2 and tier 3 cities in Java as well as Sumatra. And they rely on a network of resellers. They have over 1 million resellers, 230,000 of them are active every month. And through that, they have an e-commerce platform where people can buy, the resellers can buy, and then they sell to the end customers who may not even have access to the internet. And I think this is a very powerful opportunity because a lot of these merchants who are in this platform need access to finance. The resellers also need access to finance because they're growing. About 70% of these resellers are women as well. So that's where we see the opportunity taking place in digital, where you're taking advantage of the data that's being generated through these real sector platforms and bringing in financial partners, whether it's banks or fintechs, and IFC providing that support to help de-risk that opportunity for these banks and fintechs. So we see that this growth is going to continue in Indonesia. There's a lot of opportunities that are being explored related to that, and we believe that we can bring in the right partners to do that. It's interesting to hear, Joshua, how the market has evolved here from the VC side of things. I think it's going to be interesting to see how we can add more value to these platforms to make them more opportunistically to be able to exit and find the right partners to do that. So that's part of the reason why we are doing this kind of work with these real sector platforms, to really enhance their value ultimately so that they can become the next decacorn or the unicorn here in Indonesia.
Well, I'm looking at a startup here, Indonesian AgTech. Maybe you can chime in to talk about your value proposition, how to get to that competitiveness, and then have the exit strategy in future.
Sure. So I think, again, I'll reflect back on the initial points that I mentioned. The clear focus has to be there on, what are the needs that needs to be solved in this sector, specifically agriculture, if I talk about. So it is going to take some time to bring in that, digital literacy, but I think we are on a path to bring in that kind of a change or influence in the agriculture sector at least. When it comes to, specifically financial literacy, I think, there are different kind of challenges, again, in this agriculture sector specifically. First one is focus on the kind of financial product that we end up offering to the end consumers. That has to be super, super easy for faster adoption. So I think, that's all I want to add on this. Yeah.
Well, Henny, perhaps we can touch upon some of the fintech regulation and innovation that we talked about in the VIP lounge from a regulatory environment that's crucial for fintech to really grow and be able to balance that with fostering innovation. Perhaps you can comment on that?
Yeah, sure. And obviously regulators have sort of multiple aims or objectives, and it's balancing those. So whether it's consumer protection, whether it's the kind of financial ecosystem, and then fostering innovation, which I do feel is should be an objective of regulators. And to be blunt, I think in the region, and not just in the region, across the countries we invest in, across emerging frontier markets, the experience has been mixed. There's been some good examples, and then there have been some quite poor examples of how regulators have not put in place the framework to foster a healthy ecosystem, or have been playing catch up, so knee-jerk kind of reactions and regulations. I think all of those elements are needed, and I think one thing I would encourage regulators to do, and we've, as I said, we've seen some good examples where the fintech regulations in Indonesia are far more advanced than elsewhere in ASEAN region and other markets. There's still work to do. I think there's things to kind of learn on and improve on. But in other countries, we don't have any fintech regulations, or we don't have sandboxes, or we've been promised sandboxes and nothing has kind of transpired. What I would say is that regulators should engage with the market participants more, and I don't necessarily see that in a lot of these markets. So if we take parallels to regulation that comes out in Europe, UK, US, where the regulator would put out a white paper or a draft regulation and put it open for comment. It's out there for X months, X weeks, whatever it is, and for participants to comment and provide input, because these participants are in the field, they know the business, they know what's going on, and there's good actors and there's bad actors, but it's a case for taking in all of that information and then putting in place the regulation. So not really being the police, but being the party that fosters a healthy environment and ecosystem. And I think that's actually, in a lot of ways lacking, and that's maybe holding some of this back a little. And the trust point that Miguel mentioned, I think that kind of feeds into that, right? So people have more trust in regulation in a particular country over another because they see the way that regulator acts. There is, stability of decision making. There's transparency in that decision making. There's predictability as well. You don't want, lack of stability or lack of predictability, because tomorrow you could have a complete left field regulation that comes and torpedoes a whole heap of businesses, and that doesn't help either.
Well, I think we would like to open this to the rest of the audience here to ask questions. Anyone? Okay, let's see. We have someone here. You can get the mic over. Maybe introduce your name and organization and the question, please. Thank you.
Hi. Hey everyone, I'm Wahyu from Amartha. So I've heard that from the beginning of the conversations that technology should make things more efficient and more cost effective. But on the other side of the discussion, we've also heard that there's quite, maybe I said, unsuccessful exit strategy in the investment term. So my questions ultimately will become, should we kind of holding back on the growth because the cost of digitizations kind of forgetting the profitability or sustainability of the business side of things? Or is there any other key factors that we should always account in building business that focusing on the technology and digitizations? Yeah.
Anyone wants to answer that question? I think.
I can take that, yeah. I can take that. So I think to address some points, so number one, I think as investors, we always look for both, right? Basically, the one that can really scale up and the one that can really create sort of a positive EBITDA. So I would say that it should not be a choice. I think different companies have different strategies to be able to reach the scale. But, at least for us, the way we always look at company, capital efficiency is one of the key factors, right? Meaning that, how much money that you basically, the definition of capital efficiency comes down to how much money you need to spend in order for you to reach certain scale, essentially. So I think we had a conversation, some companies in Indonesia, actually not some, but most companies in Indonesia that raise venture funding, especially in 2020, 2021, a lot of them are not necessarily capital efficient companies, meaning that they require a big amount of money, and right now, I think their revenue is still below the amount of money that they raise, unfortunately, total money that they raise. So that's number one. I think we need to find the balance or the combination between the both, right? Number two, and I think this relates to capacity building, right? So I believe that, M&A, like a big magnitude M&As, which should be like the drivers of the exit market or exit ecosystem in any startup ecosystem, should, especially in venture-backed companies, should revolves, or the DNA of it should be on the innovation part of it. Unfortunately, in Indonesia, I must say that not so many, what you call it, 0 to 1 companies. Meaning that most of them are like, I would not say me too, but it's like, Frankenstein's transplant of the Western sort of, benchmark, right? It's not necessarily 0 to 1 type companies that, that being like started up here, right? I think multiple factors, but a few factors among them is like, number one is the quality of the talents. I think we don't have enough sort of STEM educated talents, and not so many universities are enforcing that in Indonesia, whereas in the US, especially the Silicon Valley, you find the Stanford, the Berkeley of the world. And number two is that the research itself is pretty much lacking. Research meaning that it's not, I think our government is focusing university-based research to publish journals, but I don't talk about that type of research, but more research on, for example, like, companies like Eli Lilly and Novo Nordisk, if you know, like the GLP-1, the new sort of, what do you call it, like diabetic medicine. Right now Novo Nordisk is the most valuable company in Europe right now, above LVMH, right? So basically it's because the GLP-1 drug, the Ozempic, right, that they found. It's a very, very research-based sort of innovation. I'm not saying that we need to find that type of innovation here, but I would say that considering that we're talking about public-private partnership here, the government need to be able to work with the private sort of institution, private investors, and also universities in order to be able to foster this type of innovation to increase not just the quantity, but also the quality of the companies, the quality of the businesses that eventually we born in Indonesia at the very least. So I think that's my sort of 2 cents.
Good intervention. Anyone wants to add to that?
When I did a lot of work in Africa, one thing that we noticed, especially on rooftop solar and providing distributed off-grid solar solutions to people who were in rural villages who didn't have access to electricity, most of these were startups. And interestingly enough, they followed that traditional model of growth, growth, growth at all costs, so that way you can get market share. And one thing that we found over the last 15 years we were doing this is that a lot of these companies get into this hamster wheel effect. In order to continue to grow, you have to continue to spend more cost. And ultimately, to become profitable becomes very difficult. When you're founding a business, in our perspective, you're doing it because you believe that there is an angle to become sustainable and to be something that can drive impact and sustainability at the same time. It's tricky, right? You have this expression, can you do good by doing well, or do you do well by doing good, right? Which one comes first? Can you do both at the same time, right? And I think this is the key point to make. There is a way to do both at the same time, but at the sacrifice of growth. I think you need to figure out from early on, how do you get unit economics right? So that way, you're not going into this hamster wheel effect where it's always growth and you can never see a point where profitability can happen. So to me, I think, developing that kind of mindset, and we have developed a program where we call Path to Profitability, a toolkit that we provide to these startups. And we have expanded that to other parts of the world. So that way people can understand and founders can understand, how do you get to that unit economics, in a much faster way than spending years, driving growth and not seeing the profitability.
Very good point.
Can I just echo Miguel's point? I think that the fintech space, the tech space in general, is always looked at growth first. And that, I think, quite frankly, has spoiled the space. It's made the end goal murky, unclear. What are you actually getting to at the end? And no offense, but I'm going to take a little dig at the VC space, but it's a little bit spoiled by the amount of capital that was thrown into the space by the equity side, which the incentive was to grow, and I can understand the incentive. The incentive is to grow and reach certain scale so that then it results in a certain exit or value or whatever value creation. But when the rug's been pulled from under a lot of these companies, they're kind of left wanting because unit economics doesn't fully work. And it's strained and it's challenged, and that's why we're seeing some businesses actually closing, and we're seeing that in a lot of cases. And I think your example on Paygo Solar is a really good example where grow, grow, grow. Does it actually work? Actually, no, it doesn't work. You have to relook at the business model. And the first person did it, and the second person followed the first person, and the third person followed the first and the second, and so on. Nobody actually sat down and thought, is this the right model, until the rug's been pulled from under.
Very good points. Anyone wants to add?
Yeah, I think just want to add on to what Joshua mentioned, right? This is the harsh reality of the capitalist world, right? Where investment has to give returns. So I think looking from this lens, like as from the founder lens, at least, which path you want to go to, whether you want to do social work or you want to build a company which is for capitalists, right? So I think while you're choosing a path of being on the latter one, like working with capitalists, you have to give returns. There's no other way. And personally, at least I've done this 3 times now. The amount of pressure it creates if you keep on procrastinating or delaying the profitability and unit economics aspect, it really hampers your personal life as well. mentally.
There is no personal
Yeah.
life. That's
And I think secondly is just about further also hampers your mindset in terms of thinking about innovation and doing more progress on innovation, because you're just focused on growing faster and showing growth results to VCs. So I think it makes more sense to choose capitalist world, be very careful about unit economics, and then start scaling about things. Otherwise, there's another path of social world where you can go and do philanthropic work as well. Yeah.
I'm with you, because I spent the last 5 years working in agriculture, and ag tech is an extremely difficult space, and I feel for you because it requires a different mindset to invest in an ag tech, especially called patience capital, which many of the investors are not quite willing to give, because 5 years or less to get return on investment is extremely hard and unrealistic in the ag tech space, I have to say. Maybe fintech is quite possible, but ag tech is extremely long tail. So I feel your pain, and I can sense that you have sleepless nights in this space. So but thank you for making time to come here and share your thoughts. Any other questions from the audience? Yes, we have one over there, please. Your name, organization, and question, please.
My name is Istanul from Amartha also. I got from the session all the session from the roundtable session today. I got the conclusion that to achieve the economic inclusivity, it's a series of collaboration between stakeholders, not to mention institutional, vendors, startup, and banking also. Based on current situation, what can we do to speed up I believe each stakeholders has its own puzzle. What can we do to speed up the collecting or uniting the puzzle to achieve what we aim for, the growth in grassroots through micro SME? Thank you.
Question. Anyone?
Go ahead. The question is still tough. I'm still thinking.
Well, I mean, it is a tough question, because I think that we can all play our own part in the journey, right? Whether it's advancing literacy or the ecosystem in terms of the infrastructure, advancing regulations, advancing laws, putting more capital in. How do we speed it up? Obviously, I think the obvious answer is everybody kind of collaborates and works together. But that's a utopian sort of scenario, because everybody's busy doing their own things, and I meet Joshua today and I meet Gaurav today, but tomorrow I've met somebody else and done something else with somebody else, and yes, we collaborate individually. The only way to do that sort of full-scale collaboration is for it to be forced. I'm going to come back to my earlier point. I think if the government makes people do things, then it happens. And that's a fact of life. I think that there are a few other questions, and maybe we're kind of reaching a natural kind of conclusion point. But one of the things that we've talked about, and one of the earlier questions was about cost of digitization versus the benefit of digitization. And yes, there's a cost of digitization. There's research out there. People have kind of done studies, etc. But that cost of digitization is coming down and down, right? I mean, you just have to look at, and again, this is kind of sewing together a number of points. But you look at Africa, you look at Kenya with the use of M-Pesa, the mobile money system. That is so ubiquitous. It's like UPI, it's like PIX. But it was done before, and it was done in Kenya, of all places, right? Why did that happen? Because Safaricom is owned by the government, so there's a government push, and Vodafone. And so Vodafone provided the innovation. Safaricom, so the government kind of took it on as well. And it's by far the dominant player there. So everybody uses M-Pesa. And the cost of adopting that, it's not a lot, because you don't need a smartphone. You can have a dumb phone and you use your USSD codes and do that. And I've personally used this M-Pesa, and it's so straightforward. It's so easy to do. So it is possible to do, but again, it takes kind of impetus from further up from where at least I'm sitting, further up from that to actually make it happen.
I couldn't agree more. I mean, I'm supporting many of the governments in the Southeast Asia region, right? Vietnam, Indonesia, and Philippines. And the government that really put full force in investing in digital public good, connectivity, energy access, digital capacity building, and the young talent, those are the ones that really are able to really harness the power of digitalization. I mean, I'm seeing that in Vietnam. I spent the summer there as a Fulbright scholar to help them with the digital program in the university. And I see so many hungry young talents and so entrepreneurial in Ho Chi Minh City. So it's remarkable that they are going to be able to punch above their weight in the digital economy area. And I really hope that Indonesia will also participate in that journey together. Are there any other thoughts for this question? Because we are almost running out of time.
I think one last thought, and coming back to Hani's point, and an example of how digitization and collaboration across stakeholders is so key, and to drive that is the concept of open banking or open finance, right? Where you really need to have all different stakeholders to play a very important role to drive that to success. And you've seen mixed results depending on how involved some stakeholders are or not, right? So in some markets, like in Europe, they've taken a very draconian approach where the regulator mandates the fact that you have to share data with third parties, with the customer consent, and we will dictate what standards you have to use and all that, without really talking to the banks in detail of, what exactly are the standards that we should be using, and not really doing a very detailed, consultative approach with the financial sector to understand where the needs were from that perspective. On the other hand, you have other markets like India, for instance, where they have looked at the open banking approach, where the government has taken more of a prescriptive angle and said, hey, here are the guidelines. Here's what we believe you should be happening. And here, by the way, are the standards you should be adopting if you want to adopt open banking, right? And the market has flourished when it comes to that, right? It has driven new business models, new opportunities in terms of, account aggregators who are thriving in terms of getting all this data available to share with other parties in a very low-cost manner, right? So, yes, you need a driving force from each of these different stakeholders, but ultimately, I think the government has to play a very key role in doing that. And I think it depends on each market which one makes the most sense to really make it thrive. But we have many lessons, and this is just one example to see how you see that partnership happening.
Great. We're almost running out of time. So perhaps a quick lightning round to all of you to put a few key parting thoughts before we close the session. Maybe we'll start with Penny.
I think I might have just given them in the last answer. I think that there's the key to digitization is really, in my view, government action. I think that's the ultimate key. I know that that's in some ways absolving responsibility from all of us, and we should continue to do all of the work that we do. I think it's important. I think there is results from it, tangible results. What Amartha's done, what others have done, are all tangible results. But if we want to really see acceleration, then I think that's it.
Agree. You? As a starter.
I think it again goes back to doing the right tech innovation, which accelerates this digital path, along with enablement from the government side. I think both factors are important, but innovation has to still kick in.
Right. Yeah.
I think that it's a rough patch, right? I think digitization process, the journey towards that has been super challenging, especially in today's economy. But as an investor, we always believe that the best companies are the ones that can come up from these trials and tribulations. And the best companies in the world are actually created during the tougher times. 2008, 2001. We can continue, but. Basically, the history is spoken, and we hope that during these tough times, the best companies can be built.
Thank you for that really positive way of ending it. Miguel, last word?
And I think this was echoed by a few folks, including Gaurav. To me, digitization cannot happen without having high touch. So high tech with high touch, to me, I think it's a really valuable piece that we need to learn, especially when we're trying to target the lowest levels of the segment of the market where you need a lot of help to get these folks to understand how to use these applications.
Well, thank you very much for your excellent wisdom and intervention here. I learned a lot from all of you, and I hope that this will result in some meaningful partnership and collaboration going forward to create an even more impactful opportunity forward for Indonesia and the ASEAN community. Thank you very much for your thoughts.
Thank you so much. And for the moderator and speaker.